All right, welcome to the Explainer. Today, we're going to dive into the high-stakes world of trading, but not to learn how to pick stocks. Nope, we're here to explore a battle that happens inside all of us, the one against our own worst instincts. So let me ask you something. What if your biggest rival, in any high-stakes decision, was you? It's a question that really gets to the heart of why we so often get in our own way, whether it's treating or, just making a tough life choice. The source material we're looking at today, it's from a mentorship class for traders. It makes this incredible point. They say the biggest enemy you'll ever face, it's not the market. The market's unpredictable, sure, but your biggest enemy, it's the one inside your own head. And that one is completely predictable. So let's give this enemy a name. Our source material calls it the monkey mind. And I think that's perfect, right? It's that impulsive, emotional, totally undisciplined part of your brain that just screams at you to abandon your plan and just do something. It's that little voice of fear or greed or hope that hijacks all your logic right when you need it most. And this quote from the mentor just nails it. That urge to trade comes from the monkey mind. It makes your focus shift from the process. Think about that. The second you feel that frantic need to just act, right now, it's already too late. Your focus has snapped away from your logical plan and boom, the monkey mind is in the driver's seat. Okay, so we've met the enemy, but what kind of damage are we actually talking about here? Let's break down some of the classic costly mistakes that this monkey mind causes. And trust me, this isn't just about trading. This applies to any time you need to be disciplined. Yeah, and I bet some of these will sound familiar. You know that fear of losing your gains, so you sell a winner way too early? That's the monkey mind. Or how about holding on to a loser for way too long, just hoping it'll turn around? That's the monkey mind too. Or revenge trading, or chasing some sure thing out of pure greed. All of these are just symptoms of that emotional part of your brain grabbing the controls and throwing your strategy out the window. And this is so important. These aren't failures of strategy. You could have the most brilliant plan in the world. They're failures of process. The problem isn't that your plan was bad. The problem is that your emotions completely hijacked it. Okay, so if the problem is a broken process, how in the world do you fix it? Well, this is where it gets really interesting. The mentor lays out what's basically a boot camp for your brain. It's a training regimen designed to do one thing: build a process that's so strong, so automatic, that it just silences all that inner noise. And the whole thing, it's built around one single number, 30. That's it, 30 repetitions. And get this, the goal for these 30 trades isn't to make money, not at all. The goal is to build a habit, to build a process so strong that it literally starves the monkey mind of the chaos it needs to survive. So here's how this 30 trade rule works. It's almost shockingly simple. Step 1, you pick one strategy. Just one, no improvising. Step 2, you execute it 30 times. Win, lose, it doesn't matter. You follow the rules. Step 3, you document everything, not just the entry and exit points, but what you were thinking, what you were feeling. And then, only after all 30 trades are done, do you sit down and analyze the data. Not your feelings, the data. See? The goal isn't profit, it's perfect execution. And this is the magic of it, right? The mentor explains that you're literally training your subconscious. After you do this 30, 60, maybe even 90 times, the process just becomes automatic. It's a habit. It's your new default setting. And when that happens, the monkey mind doesn't even get a chance to speak up. It gets shut down before it can even start yelling. Now, what's really cool is that this whole internal battle, it isn't just some abstract idea or a feeling. Oh no. There's real science behind it. It's rooted in a well-documented psychological bias that affects, well, pretty much every single one of us. All right, let's do a quick thought experiment. Imagine I offer you a choice. Option A, I give you a guaranteed $500 right here, right now. Option B, we flip a coin. Heads, you get $1,000. Tails, you get nothing. What do? Well, study after study shows that most people, they take the guaranteed $500. We are just hardwired to lock in a gain. Okay, but now watch this. Let's flip the script. Now you have to choose a loss. Option A, you have a guaranteed loss of $500. You have to hand it over. Option B, we flip that same coin. Heads, you lose 1,000. Tails, you lose nothing. What happens now? All of a sudden, the vast majority of people become risk takers. They choose option B. They'd rather risk a bigger loss than accept a definite, smaller one. And what you just saw is a perfect example of what psychologists call the disposition effect. It's this weird cognitive bias where we are risk averse when it comes to gains, but we become risk seeking when faced with losses, which, if you think about it, is the exact opposite of what you need for a profitable, disciplined strategy. So let's bring it all back. That nagging little voice in your head, the one telling you to sell that winning stock early just to lock in the profit, or the one whispering to hold on to that losing one just in case it turns around, that's not just you being indecisive. That's not just a bad habit. That's your monkey mind, and it's running on this deep-seated, powerful programming of the disposition effect. Okay, so we know the enemy. We know its playbook. We even know the science behind why it's so powerful. So the big question is, how do we fight back? How do we consistently tame that monkey? Well, our source material gives us a fantastic toolkit, a set of habits for winning this inner war. This is what you could call the anti-monkey mindset. And notice the theme here, it's all about process. Before you even think about profit, you ask, what's my maximum acceptable loss? You treat what you're doing like a serious business, with plans and reviews, not like a trip to the casino based on a hunch. You have non-negotiable rules. And maybe most important of all, you understand that small, planned losses aren't failures. They're just the cost of doing business. And man, that's a lesson that applies far beyond the trading floor, right? When you really boil it all down, the journey our source material is talking about, it's a journey of internal mastery. It's not about being smarter than the market or smarter than your competition. It's about being more disciplined than your own mind. And so I'll leave you with this one final thought to chew on. The next time you're facing a really big decision, something with high stakes, and you feel that pressure mounting, just stop for a second and ask yourself, who's really making this call? Is it you, or is it your monkey mind?